We sat down with Silicon Valley icon Guy Kawasaki, the man who launched Apple's first Macintosh computer, to learn his thoughts on how to find fulfillment in work and in life in general. He had a lot of wisdom to share.
I think the key for that kind of fulfillment is that you figure out a way to somehow, in the words of Steve Jobs, make a dent in the universe.
Hi folks, Adam Taggart, Peak Prosperity co-founder here, welcoming you back to Peak Prosperity, where we're going to talk about these crazy markets and try to make sense of them as we do every week and try to understand money and maybe a little bit of life in the process. I'm very excited to welcome today's guest, who is Guy Kawasaki. Guy is a marketing expert. He's had a storied career in Silicon Valley. He's helped launch some of its most iconic products, including the Apple Macintosh computer. It doesn't get more iconic than that. Guy spends his time when he's not launching products, sharing his wisdom with entrepreneurs and also helping raise capital for promising startups. He currently serves as the chief evangelist for the excellent Canva.com. And he's also a very highly sought after speaker and best-selling author. We're very lucky to have him. Guy, thanks so much for joining us today.
Thank you. Thank you. I mean, one of the positive things about a pandemic is that you can make more of these appearances. It's easy. It used to be face-to-face meetings and face-to-face interviews. You'd have to get in your car or get on an airplane. But now, 5 minutes ago, I was eating lunch.
Well, thank you for taking a break from it to come chat with us. And I do want to jump into kind of that topic with you in a bit here in terms of what are some of the ways this pandemic has accelerated, some of these trends that might have and changes that might have taken a lot longer to happen, but have now been, fast forwarded because of 2020. All right. So, most experts like Guy who work in tech and marketing and venture capital, they're kind of wired to believe the future is going to be much better than today. And, Peak Prosperity, we talk about a lot of concerning issues, and we have a lot of people who are kind of worried about the future. But it's interesting because I wanted to bring Guy on to share his perspective. And as we just alluded to, Guy, 2020 has certainly brought a number of challenges to the economy and to society at large with it. And I'm very interested to hear where you think the puck is headed. So let me ask my first question here, and I'll let you run. You are, a lot of our guests are sort of folks who they work outside the system and they comment on what they see is right or wrong with it. You're actually embedded in the system. I mean, you're there in Silicon Valley, in tech, you're running companies, you're helping people launch companies, you're helping fund companies. So you're really close to the heartbeat of the digital economy. What is your sense of the economic landscape today, post-COVID? Like, what are the biggest changes you're seeing going on in the ecosystem that you work in?
Well, I hate to burst the bubble, but if you think people inside tech are better predictors of what's going to happen than people outside of tech, oh my God, you better rethink that position. So if you were to go back in time and it would be February or March, I would have said the stock market would collapse, that entrepreneurship would collapse, that it's a recession/depression. Amazon would collapse. Nobody has money to buy anything. Instacart would collapse. I mean, everything. And basically, I've been 180 degrees wrong. Now, looking back, you could say, of course, Amazon is doing well. People are all staying at home. You can't really go out shopping as much, so they're going to go mail order. And of course, Instacart's going to do well because you can't go to the store, so they have to deliver it to you. Okay, so yeah, that's all fine and dandy. But go figure. So going back upstream more, because that's where my expertise is really at. I would say that the richest vein for great tech startups is two guys in a garage, two gals in a garage, or a guy and a gal in a garage, and they create a product that they want to use. And then lo and behold, they are not the only two nutcases in the world who want to use it. And I think that describes Apple, Google, Yahoo, Facebook, et cetera, et cetera. So if you think that if you're inside the valley, you know what a proven team is, you know what a proven technology is, and you know what a proven market is, I hate to disappoint you, but you could almost make the case that You take the dumbest idea that comes across the transom and you place your bet on that and you pray. That would be a closer investing algorithm than to think that you're omniscient and omnipotent. The rare exception, I would say, is probably Sequoia as a venture capital firm. And Sequoia and Kleiner Perkins. But other than that, I think it's a big crapshoot out here.
Yeah, it's funny you mentioned Sequoia. Charlie Munger, Warren Buffett's right-hand man, just mentioned them today, at least in some news articles that have been out there. One commenting on just sort of the miraculous market value that Apple's been able to amass over time, said it dwarfs anything that, Rockefeller's kind of previous dynasties had amassed. Yeah. And said basically, it's in this market, he basically said Sequoia was sort of stands head and shoulders above the rest in terms of being able to invest more intelligently in truly frame breaking, value creating technologies and companies and whatnot. Charlie's big thing was his success has been dependent on not being stupid, not taking the too risky bet and just trying to be safe and prudent. But he said the guys at Sequoia kind of break the mold. They're able to kind of identify tomorrow's winners today. So I want to tug at that thread for a minute though, Guy, because, whoops, sorry, go ahead.
Well, if I may add, this theory of you investing in two guys, two gals, a gal and a guy in a garage, making what they want to use, I ripped that theory off from Michael Moritz of Sequoia. And so I've seen him many times in conferences when, of course, at every venture capital conference, there's a venture capital panel. And the moderator asks, so what do you look for in a team that you're investing in? And every other venture capitalist says, well, we look for a proven team. And then you get to Michael Moritz and he says, well, we're looking for guys and gals in garages and bedrooms, and they're making the product that they want to use. Unproven team, unproven technology, unproven market. And that's what they did. And hallelujah. I mean, you can't argue with Sequoia's results.
You can't argue with the results. Yeah, exactly. Well, I do want to play off of that because, the stay-at-home technology businesses that you kind of alluded to earlier, they've done very well during the pandemic. There are a ton of businesses that have not. Right. Mm-hmm. Particularly, smaller brick and mortar type businesses, sure. Entire industries, travel, et cetera, just gotten absolutely clobbered. Right. So there are a lot of people right now, literally tens of millions of people who are out of work or their companies are going under or have already gone under, who are going to have to sort of reinvent themselves, both professionally and maybe personally. And I've been watching a lot of your videos online today, a lot of TEDx talks and other type things. You're a wonderful speaker. But kind of building on top of this, zero in on something you want that creates value in a way that you understand, kind of build what you want to see, be fearless about being quick about it, not being perfect about it, but getting it out there, listening to the market, all that type of stuff. I think there are a lot of people who are going to be, really needing that type of guidance as they ask themselves, yes. What do I do next? Right. So, that's just sort of an open softball to you, but, given kind of your background and your perch, as really having a good sense of what does lead to success or whatnot, is there any advice you'd have for those people that have been displaced by that?
Okay. So first of all, as a rare moment of humility, let me explain that I am the person who quit Apple twice and turned Steve Jobs down a third time. And I am also the person who told Michael Moritz that I did not want to interview to be the first CEO of Yahoo. So if you add those four things up, that's probably $2.5 billion. So okay. With the caveat that I am such an idiot to have done that, if you still want to listen to my advice, you are forewarned. Okay. So I could make the case that take my advice, do the opposite, you'll be fine. So I would say this is a non-theoretical question that, can someone quickly reinvent themselves? That's not clear. Now, I could make the case that, knock on wood, with these two vaccines, I assume that we're going to figure out the logistics and we're going to figure out manufacturing. So, it's 6 to 9 months. vaccines will be prevalent. We'll reach herd immunity because of vaccines, not because we just said, oh, let everybody young get sick and then that's how we'll do it. I think that is just stupidity. So, it may be that if you can just last 6 to 9 months, then in-person retail, in-person eating, in-person shopping, in-person, all that kind of stuff is going to come roaring back because of all this pent-up demand. So, if I were a restaurateur right now, I don't know what I could do in the next 6 to 9 months to quote unquote reinvent myself. It may be that you just keep your head down and plan for the return of in-person dining. I don't know what else you do. I'll give you actually an example that now that I think about it, I don't know if it supports or indicts what I just said, but there's a company called Madison Reed. Okay. And Madison Reed makes hair color dye. And then their CEO figured out that, oh my God, the pandemic is coming. And guess what? They're going to shut down salons, but women still want to color their hair. And so she completely pivoted the business to become an at-home virtual colorist, AI-based, bot-based, walk you through a few questions, figure out what color, hair color, subscription basis, all that good stuff. And so that is an example of truly seizing the day and reinventing yourself. Now, I don't know how you apply that to food is the problem.
Yeah, well, but I think the principles are all the same, right? And you touched on one or two of the ones that I was watching you present on earlier today that I thought were really interesting. So one, you've said, listen to feedback, right? Like put it out there, hear what the early adopters are saying, and then quickly rev to iterate closer and closer and closer to what people are saying. Yeah, this is really interesting. And it sounds like that hair salon, the coloring business was probably a really good example of that, right? Where they pivoted from the in-store to, hey, I'll help you do it at home. Is this good? Is this good? Is this good? And one other thing that you've talked about a lot, which I think would be useful for folks to hear about briefly, is this simple matrix that you have. And I think I know you know what I'm talking about here, right? But I think that works in business, but I also think it works sort of for your own personal brand. If you're trying to, get hired or whatnot. Can you talk very briefly about that unique value matrix?
Imagine there's a vertical axis, and on the vertical axis, you measure the degree of differentiation or uniqueness that your product or your service represents. There's also a horizontal axis that measures value. So at the place where the two lines intersect, this is lots of uniqueness and little uniqueness. And this way it is little value, and out this way is lots of value. Okay, so that's the 2x2 matrix. And so if you have lots of value, but you're not unique, you always have to compete on price, right? So if you have the same thing, as good as it is, you'll have to compete on price because you have the same thing as anybody else. In the upper left-hand corner, you are truly unique, but you are of no value. You're just plain stupid there. In the bottom left corner, you have something of no value, and lots of people do the same no value thing. You're stupid and crowded there. And the corner that you want to be in is the upper right-hand corner, where what you provide is unique and differentiated and valuable. So think of the first iPod. That was in that corner because it was the only device that a human could operate. You could get a large selection of music. You could easily install it. You could legally install it. And it was 99 cents per song. So that's what made iPod unique and valuable and therefore successful. And I think that matrix applies to basically all of life, whether it's a product, a service, or whether you're an employee. If you are a unique and valuable employee, guess what? The company has to take care of you. And I would even stretch this metaphor to say that if you're a unique and valuable spouse, you'll be truly loved and appreciated.
Well, as someone married to a marriage family therapist, I think you're spot on with that one. So I think it's a really helpful matrix, and sometimes the simplest things are the most useful because they're just they're just based on real reality and they're easy to remember and easy to work with. So in this one, I sort of think whether you're trying to design a new product, build a new business, or just figure out what your next professional role is going to be, it really is zeroing in on saying, what's the value that I can create, right? Where can I create sort of maximal value? And then once I really know what that is, what my value proposition is, how do I try to differentiate that as much as I can? How do I try to go up that unique scale so I'm getting closer to that kind of magic quadrant? Is that basically how you look at it?
Basically, yes. In the magic quadrant is where margin, money, and history is made.
All right. And as you said in a couple of your videos there too, Guy, folks who just listened, we just saved you about $5 million, which is what McKinsey would charge you to walk you through that matrix.
McKinsey should pay to take me off the market. They should pay me to stop doing videos.
So again, you've got one of the seats closer to the front of the stage in terms of what's happening in the world of innovation, digital economy, that type of thing.
Yeah.
What innovations have your eye right now? What are you most excited about?
Well, I'm most excited about mRNA vaccines. What a great development. And I'll tell you something, though. I think that I'm 66 years old. I don't think that I'm in the position to tell you what's the next big thing. I think it's much more likely that two guys in a garage, I keep going back to this metaphor, two guys in a garage, two gals in a garage, or a guy and a gal in a garage, they create the product that they want to use. They're unproven team, unproven technology in an unproven market, and they become the next big thing. I don't know who those two people are in a garage and what they're working on. I hope that I have the brains to recognize it when I see it, but I can't predict. And if anybody in Silicon Valley tells you, especially people on Sand Hill, other than Sequoia, can tell you that they can predict the future, then you are listening to someone who has delusions.
All right. Well, look, folks who are inspired by that. So I've lived and worked right next to Sand Hill. I'm curious to get your thoughts on this. So, if you live or work somewhere near Sand Hill, you're living in Mountain View, Redwood City, Palo Alto, Menlo Park, whatever, where rents are super sky high.
Yeah.
And, in the past, people have been willing to pay to be there because that was, quote unquote, sort of the center of the universe.
Yeah.
But now there are lots of different places to go to that have critical mass of people with technical backgrounds. There's also, you don't really have to be in the office anymore. A lot of companies are learning, right? You can now work remotely. And so, gosh, if I can work with a team that has Silicon Valley talent, but I'm living in St. Louis and I can, have a much better quality of life and lower cost of living. Basically, my question is are we going to see like 1,000 garages bloom coming out of this diaspora now?
Well, I hope so. So, it used to be somewhat true that it was a big advantage to live in Silicon Valley, because then you could go to Bucks and you could bump into John Doerr, you could bump into Michael Moritz, right? And so that was an advantage. You would go to a networking party at the Churchill Club and you would see the CEO of whatever, Mark Andreessen, hanging out at Stack's restaurant at El Camino in Santa Cruz Avenue. So those kind of things could happen. But let's face it, with the pandemic, whether your little window on Zoom is calling in from Croatia or Redwood City or Sydney, Australia, or Auckland or Buenos Aires, it doesn't really matter. I mean, a Zoom window is a Zoom window. So I could make the case that this is a great flattening experience. And now I would argue that maybe it's going to be more of a meritocracy, because now what all Zoom window chats are created the same, right? All sharing is created the same. So it may be a more democratization of entrepreneurship. I'm from Hawaii, and Hawaii has Silicon Valley envy, right? Well, who doesn't have Silicon Valley envy? But I said that, listen, two guys in a garage in Hawaii on Zoom is the same thing as two guys in a garage in Menlo Park on Zoom calling into Kleiner Perkins or Sequoia. What's the difference anymore? So focus on your prototype, focus on your product. And the best Zoom conference starts off with, well, we've been bootstrapping, and now we're signing up thousands of people per day. We're nearly break even, and we need growth capital. Hallelujah, man. May that come through your Zoom. I mean, that's what everybody's looking for.
Excellent. All right. Well, look, hopefully you're giving lots of inspiration to folks that are watching here, whether they are hoping to cook something, brand new product up in their own garages, or helping to sort of, reinvent themselves, whether they have been displaced in the workforce, or just want to get ahead in life. So guys, we kind of wrap up here real quick. Look, we can close any way you like, but again, having read some of your books, having watched a number of your presentations, you're a man who shares a lot of sort of the wisdom of the universal lessons you've learned along the really amazing path you've taken in life. Your latest book, Wise Guy, everybody should read that. But I guess my question for you is, especially as we're going into this sort of uncertain future, and you've certainly, let us see through a lens with a lot of positivity in there, but, we've got sky-high market valuations that if it's not different this time, we'll have to correct at some point. And if it's not different this time, we're going to have to learn to live in whatever that world looks like. So as I always sort of say, look, there's no guarantee in life that whatever path you take, the money's going to follow, right? Even if you do everything right, you just might be unlucky. Sometimes people are. But if you wake up every day enthused by what you're doing and living a life of fulfillment, and you've kind of won the game. So my question is, given your life path and your perspective on life, you're very informed and seasoned and successful perspective. What do you sort of see as the key elements for that kind of fulfillment in life?
Well, I think the key for that kind of fulfillment is that you figure out a way to somehow, in the words of Steve Jobs, make a dent in the universe. Now, you could make a dent in the universe by creating a better search engine, Google, or a better device, Apple. But you could also make the world a better place by being a mentor, a coach, or what I think is the most important function, a teacher. So a teacher and a medical frontline worker, they are denting the universe. They may not be as famous as Steve Jobs or Elon Musk, but they are denting the universe. And so I think, you start with somehow denting the universe. And it doesn't have to be like a jackhammer dent. It could be, I had a 6th grade teacher in Hawaii, and I was going to a public school in a lower middle class part of Hawaii. She convinced my parents that I had enough potential that I should get out of the public school system in Hawaii, which was not so great back then, and go to a private school because I had to be intellectually challenged and I had potential, so they should stick me in that track, right? So if that 6th grade teacher had not had the discussion with my parents, and if my parents had not decided she was right and made the sacrifice, I don't know where I'd be, but I would not be where I am. So in my humble opinion, she dented the universe. And so for me, especially, so I think it's all about denting the universe. And as you look back, it might not be the amount of money you made. I think it's more how much good you've done.
Yeah, I love that concept. It kind of harkens back to the value, uniqueness chart, where you're sort of asking, where can I really, what value do I have and how can I maximize it? Here you're saying, where can I really take that value and make the biggest dent in the universe in the way that fulfills me? And again, doesn't have to be launching the next Google, but it can be shifting the trajectory of the next Guy Kawasaki to go from, stuck in one track to another one where he's going to flower. So I think that's great perspective. With that being said, Guy, thank you so much for the time.
May I say one more thing? So
you may say as much as you want.
So I'm dead serious about this. So I have a podcast called Remarkable People, and you can learn about it at remarkablepeople.com. And I don't want you to think that this is the kind of podcast where it's 95% me talking and 5% the guests, or even 50-50. It is 5% guy, 95% my remarkable guest. So I promise you that if you listen to my podcast, you'll see and hear that people like Jane Goodall, Margaret Atwood, Christy Yamaguchi, Steve Wolfram, Steve Wozniak, Andrew Yang, Bob Cialdini, David Ocker, Sean Thompson, you may not recognize every name, but they are all remarkable in their own right. And by listening to my podcast, I promise you that you will become a little bit more remarkable too.
Well, thanks, Guy. You usurped my final question, which is where should people go to learn more about you and your work? So we're going to send them to your podcast. I will put an overlay up on the screen when you were mentioning the URL so that people will know how to find it. Thank you for being our remarkable guest today. Such a pleasure, Guy, and hope to have you on at some point in 2021 to see what the world's doing then.
Well, I'll just be in my closet here. So take care.
Thanks, Guy. All right. So as we do every week, I'm going to be talking with the lead partners of New Harbor Financial to discuss what the markets have done since last week. This week, we're joined by Mike Preston. Hey, Mike, how you doing?
Hey, Adam. Nice to see you.
Good. I know John's off this week. All right, Guy Kawasaki. The guests just get more and more interesting. I hope you enjoyed that conversation. It was really fun for me, both to have the conversation with Guy, but also before and after. We have a lot of points of commonality from my old days in Silicon Valley, and it was fun to talk with somebody who's really kind of part of Silicon Valley lore. It was really interesting for me. But I hope folks got some interesting frameworks out of that. And, just as a note too, folks, we're going to continue bringing in all sorts of guests to this program who are market experts and whatnot, but we are going to begin to be bringing people in who can bring in additional expert perspective to just sort of all aspects of money. Whether it's your portfolio or whether it's your, how you manage your personal finances, or maybe how you can actually perform better as in your career as a business owner, et cetera. But with that said, Mike, let's do as we do every week and get to the markets. Looks like it's kind of been more of the same, but you tell me.
The weather hasn't changed. It's more of the same. Yeah, it's. I know that it's not that exciting to say the same thing every week, but this market continues to, it just continues to go up and to the right in a straight line with almost no pullbacks. Really, literally almost no pullbacks. Even hourly pullbacks are extremely rare. So, yet another week, yet another high across the board today. S&P is up about 52 points since we talked last time. Interestingly, though, there are a lot of other things are up too. I mean, gold is up about $50 from last week. Bitcoin exploded to new highs today. So gold, silver was up, I think, $1 today. The dollar itself, interestingly, a lot of people aren't noticing the dollar's kind of collapsing. The dollars that hit a 6-year low today at 89, went from about 102 to 89 just this year, and this is the dollar, the blended dollar index. 102 to 89 is not a small move. And as the dollar falls, things denominated in dollars go up in value, and gold generally goes up in value when the dollar falls. And frankly, the stock market generally goes up in value when the dollar falls. I don't know where the dollar is going to go short term. I wouldn't be surprised to see a really strong bounce in the dollar. Everyone's on the same side of the boat in the same trade, thinking the dollar is going to collapse. Long term, we do think the dollar will be weak because of the crazy, central bank money printing. But sentiment is pretty negative there. I would not be surprised to see a surprise move higher in the dollar. But it's just all about euphoria everywhere in the equity markets. Tesla hit a new high. All the FANG stocks are up. We're talking to lots of people, clients and prospects that have just this guttural feeling, this sense of FOMO. FOMO is everywhere in every conversation now. I thought that it wouldn't go on for as long as it has, and it continues to. So we can't stress enough the importance of managing risk. We won't know until afterwards, but it's probably the riskiest place in the market in the last 20 plus years. And it feels great while it's going, but then it turns on a dime, and then we'll all be saying we should have seen it coming.
Yeah, well, I do want to share a couple of charts and bullet points that John sent over when he mentioned that he was going to be able to make it this week. So first, I'll throw a chart up here of the Russell 2000. This is it versus its 200-day moving average. And you'll see here that it is back to a point at which it's only been near 3 times in the past, gosh, what is that? Getting close to 50 years. One back in the, I guess, early 80s, bottom of the last double dip recession. It's actually at a higher point than it was during the tech bubble. So it's a good example, you're saying, people saying, oh, who could have seen it coming? I mean, there are a lot of warning signs like this chart that people like us who are looking at and saying, okay, this is just crazy in terms of valuation extremes. But a couple quick bullets here that I think are really key for folks to know. The put to call ratio for US stocks just hit its lowest level since 2000. That means that everybody is on the bullish side of the boat. Options value has surged to its highest on record. Over 20% of all call options were bought by small traders, the largest level since the tech bubble. So we've got a bunch of novice investors piling into the market who are buying call options, which is a clear sign that the sucker has arrived at the poker table. Median short interest for the S&P has plunged to 17-year lows. Again, that just means everybody is long. We now have the largest percent of S&P 500 members above their 200-day moving average in 7 years. So just like I showed you with the Russell charts, and the S&P is showing similar extreme distortions from its 200-day moving average. Market sentiment is at its highest level since just prior to the big volatility shock we had in 2018. And for the first time in 15 years, 60% of the indicators measured by Sentiment Trader are showing an excessive amount of optimism, the highest reading yet. I want to combine this with a quote from Charlie Munger. If you're not familiar with Charlie Munger, he is Warren Buffett's right-hand guy. They have worked together their entire careers. So Charlie is just about as much a part of Berkshire Hathaway as Warren Buffett is. Charlie is in his, I think, mid to late 90s at this point. And he just said, nobody knows when bubbles are going to blow up, but just because it's NASDAQ doesn't mean it'll have another run like this one again very quickly. This has been unbelievable. There's never been anything quite like it. So when you have an investor like Charlie Munger, who honestly has the longest living scope of the markets of almost anybody alive today, saying that he's never seen anything like what he's seeing right now, that is a huge, huge flag that we are in uncharted territory. And, as Charlie says, it's a bubble. It's going to blow up eventually. So, is it different this time? Highly unlikely. Charlie Munger doesn't think so. So, Mike, real quick, you talked about gold being up back near about 1900. Silver was up about 4% today. Bitcoin has gone on a tear. I think in the past 24 hours, it's gone from about $19,000 a coin, 19-ish and change, to a high of about 24,000. I think it's backed off a little bit at the time we're speaking here in the high 22s. But definitely the cryptocurrencies are getting a lot of attention right now. And that's from a lot of institutional capital beginning to flood in there, which is something that the folks that have been big crypto fans for many, many years have been saying that's going to be the watershed event where cryptos really come into their own. If you are still feel like you're kind of behind the curve in cryptos, I recommend folks go back to our interview that we recorded about 3 months ago with Alex Saunders, who is a noted cryptocurrency expert, where he really sort of demystifies and explains a lot of how the cryptos work, the key mechanics of Bitcoin and stuff like that. It's called Bitcoin 101. I'll put a little note here on the screen when we edit this video. But it's a really big question right now. Bitcoin seems to be at an inflection point. It's either going to be totally off to the races from here as more and more capital floods into the space, and it's going to validate all the crazy predictions that the crypto bros have been making for many years, or we're seeing a blow off top right now. And Bitcoin has corrected many times in its history, and a lot of those corrections have been really big, like over 2/3 or so. So we might be on the cusp of one of those. So it's a really interesting time for folks who are looking to gain exposure to cryptos. Do they want to roll the dice on it jumping high from here, or do they fear that they're going to be jumping in right before the next correction happens? I'm not saying I know. I do not understand cryptos well enough to have an informed opinion, but I do think that it is a increasingly binary choice for people that are considering putting money in right now. All right, Mike. So you mentioned that people are reaching out to you, concerned about FOMO and whatnot. I assume you guys are still staying the steady Eddie course as you always have. And I've seen you guys, have to be that steady rock, reminding people of the data, reminding people of valuation metrics, because I've been partnered with you guys for about a decade now, and I've seen the amount of people who didn't listen to your advice, and then we go through one of these market corrections, and it's one of those things where the second the correction happens is when you wish you could dial that clock back and make a different decision, but you can't. So what are you telling people right now that are calling and expressing those fears of FOMO?
Yeah, Adam, in those 10 years that we've known each other, we really haven't seen a real correction. It's amazing. These have been minor corrections, and they've immediately
and yet people have still panicked.
Yeah, they haven't seen anything yet, is my prediction. I've been very humbled about predictions, but my belief is that we're in the blow-off phase of the largest bubble we'll see in our lifetimes, and I can sense it in the people I talk to. The amount of FOMO and euphoria and worry and psychological regret and everything is just off the charts. And you talk about Bitcoin a second ago, and it's panic buying. It's panic buying everywhere. Tesla hit a new high today. Everything is just unidirectional. And I'm not sure I even remember the question anymore, Adam. It's hard to find the right words to describe just how uniquely extreme this is right now. Maybe you could restate the question.
Yeah, sure. It was just, what are you telling people who are saying, look, I'm watching my, idiot brother-in-law who knows nothing, who just, loves Tesla and is just buying it and, every day gets rewarded with another, jump in the stock price.
Yeah, we're having those conversations all day. If it's not the brother, it's the sister or the father or the son or the friend. I probably had 3 conversations in the last 2 days alone where that was the conversation. And and these are clients, and they're happy that we're as steadfast as we are, but it isn't easy. Let's face it. If you have doubted this, if you've stayed out of it, if you tried to do the right thing, it has been a challenge beyond what anyone could have imagined, particularly in the face of this bubble. We're telling people that this is going to end badly. This is a moment of faith. It has been a moment of faith probably for a couple of years, to be honest. This market tried to correct in January of 18, and we had a pretty quick correction. We went to a new high, tried to correct in the end of 18. It was rescued again by central banking, words and reversal of policy. And then we tried to correct again in March. That was the fastest correction on record. And then that lasted all of 17 days. And here we are at a new high again. We're telling people that this is historic. We're telling people that we're going to be talking about this for the rest of our lives. I think that we're going to be talking about this for 50 years or more. That's how extreme the valuations are. You talk about Charlie Munger in his 90s. He's never seen anything like this. This is more extreme any time in the last 100 plus years. Valuations are higher than 1929. Euphoria is higher than then. Participation in the market is higher than it was then. We are all in and then some, as a world, as a nation with monetary policy. And nobody knows how this is going to end or when. But we think it's important to reduce exposure to the stock market, certainly get down to like a third exposure to equities or less. Pay down debt if you can. Have some gold and silver just in case the rails come off. Bitcoin's not going to go to 100,000 without gold and silver following behind. And I'm not even sure if Bitcoin's going to go vertical like that. But if it does, gold and silver will benefit. And all the other stuff that Peak Prosperity talks about. Have some food storage. Get to know your neighbors, and get to know the people in your, in your network, and have some resiliency. Because, frankly, I think that this market could fall 60, 70, 80% in the next couple of years. Easy. And that's not going to happen without some major, major problems around us in our real lives. And so this is, like Chris says, this is for the whole bag of marbles, and it's only getting more extreme. That means the back end of it is going to be very extreme too. So, we view our job as to be the steadfast ones to continue to look at the data. There's not many of us left, I don't think, in the industry that haven't thrown in the towel, because it isn't a very fun thing to do, to be quite honest. But we're going to keep doing it. We're going to keep doing it and keeping the faith.
All right. Well, again, a huge thanks to you, John, and the team at New Harbor for doing that. And again, for folks watching, if you haven't done so yet, the folks at New Harbor offer a free portfolio review, no strings attached, completely free. If you're interested in learning more about it, just stick around to the end of the video here. We tell you how to sign up for a session with them. It takes like 3 seconds to do so. All right, Mike. So, as we close, I just want to reiterate what you just said there, which is, I read some of those stats that showed just sort of everybody's on one side of the boat, right? Everybody's long, everybody's buying call options, everybody feels like they're getting rich. Those of us who lived through the dot-com boom, this feels extremely familiar to the frenzy that was going on back there. And as Guy was saying, Guy, there are a few people that are kind of closer to the center of the Silicon Valley economy and ecosystem than guys like Guy. And he said that these guys oftentimes they think they know what's going on, but most of the time they're wrong, right? It's actually the guys who buck conventional wisdom who tend to have the much greater success track records. And he was talking about Sequoia as an example of that. Right now, all the experts think the same. All the experts think the same. All the non-experts think the same. Like literally everybody is over on one side of the boat. And, there are periods of time where that many people can be that right for some of the time, some part of the time. That many people can't be that right for that long. And they have had, anybody who's been along the market has had, a pretty decent, decade, to being real honest, but certainly 2020, once we made it through that 17-day correction that you mentioned, it's been a money minting machine. And you and I have talked with many guests on the past videos in this program about all the reasons why we don't think that is sustainable, right? So all I'm trying to say here to folks is don't get complacent. And if you are going to be the long this market, make that a very conscientious choice that is backed up by a very empirical, cogent argument. If you cannot make that, you really, at a minimum, need to be taking Mike's advice about reducing your exposure. But in general, I'll close by saying, we are at what we've said many times, and many of our guests have said, the most challenging investment environment in our lifetimes. And at this point, you should be working with the help and guidance of a financial professional who understands the situation that we're in, both the risks and the opportunities, but really has a strong sense of the data. And much of the data says that we are way, way past historical norms. So, work with somebody that understands the game that's in play, and then base your portfolio strategy off of that. If you've already got a good one for that, fantastic, keep using them. If you don't, really strongly urge you to consider setting up one of those free consultations with Mike, John, and the New Harbor team. And with that, Mike, I'll give you the last words. Anything else about this week before we head into the holidays?
No, not really. Just this is probably the most extreme week I have seen in my career. Certainly feels like it, or at least the last few weeks post-election. There's a lot of people. I could tell you probably a dozen different conversations I've had, with people that are bragging about the gains that they've had since the election. Guy talked about the meaning of life. I'm paraphrasing. It's not about the amount of money you make. It's about the good that you do in life. Probably. If the message here can help people get a little bit out of harm's way, then I think that we will all have done something good. I'd love to stay here and be bullish. And I just don't see anything in the data that tells us to be anything but extremely cautious. There's going to be a lot of regret for people that are overly long this market at this point. And so keep your powder dry, reduce your stocks exposure down to 30% or less. And, you'll have lots of opportunity in the future. And other than that, I hope everyone enjoys the holidays. I guess maybe we'll be talking right before Christmas, so maybe that's a little premature, but that's it for now.
Well, great way to close, Mike. And just to add Guy's word in there, in addition to taking steps to keep your portfolio prudently safe and whatnot, prudently positioned, is figure out how you're going to make that dent in the universe. And we do have the holidays coming up. And so folks, I hope you use that holiday as well to enjoy as much time with family and friends, even if it's over Zoom, if you're social distancing and all that. Hope you all have wonderful holidays. Mike, hope you and the New Harbor team all have wonderful holidays as well. And Mike, we'll be back soon with the next one of these market updates. Folks, if you want to find out who the future guests are coming up, just as usual, follow me at Menlo Bear on Twitter. And if you haven't yet, please like the video. It does make a difference. And subscribe to this channel. That way, when one of these new videos comes out, YouTube will let you know. And lastly, if you haven't yet, sign up for one of those free consultations with the guys at New Harbor. Stick around to the end of the video. We'll tell you how to do that. And with that, Mike, happy holidays, and we'll see you again soon.
Happy holidays to you, Chris, and the whole Peak Prosperity community. Thank you.
If you'd like to schedule a consultation with the financial advisors at New Harbor Financial, simply go to greylockpeak.com. These consultations are completely free and there are no strings attached. The good folks at New Harbor will simply answer any questions you have about your investment goals or your portfolio and give you their best advice given the latest market outlook. They're willing to do this because they care about protecting people's wealth and because Peak Prosperity has connected them with so many thoughtful investors just like you over the past decade. Chris and I started doing this because so many people have approached us in frustration and are looking for a solution because they're feeling out of alignment or just downright ridiculed by the standard sort of financial advisors who have been managing their money. You know the type, the kind that just pushes all of your money into the market, scoffs at the idea of owning gold, and when you bring up concerns about the market's sky-high valuations, they say, "Don't worry, the market's always going to take care of you." For many of the reasons discussed in today's video, we think this is one of the most challenging and treacherous times in history for investing, which is why we strongly believe that today's investors are best served working in partnership with a conscientious professional advisor who understands the risks in play. Now, we're agnostic which professional advisor you work with, just as long as they're good. If you're already working with one, that's fantastic. Stick with them. But if you aren't, or you're having trouble finding one you respect or trust, then consider talking to John and Mike and the team at New Harbor. And for those about to ask, yes, there's a business relationship between Peak Prosperity and New Harbor, which we had to put in place to make sure that everything is handled according to SEC regulations. All the details on this are clearly provided on the greylockpeak.com website. Also, it's important to note that New Harbor is able to work with U.S. citizens, green card holders, and those with existing assets in the USA. But for regulatory reasons, they aren't able to take on non-U.S. clients. All right, with all that said, if you'd like some insight and guidance on how to protect your wealth during this unprecedented time in the markets, go to greylockpeak.com to schedule your free consultation with the good folks at New Harbor. Thanks for watching.